guys, RC Peck with Ask RC, and the question I'm asking this week is, can I replace my paycheck with investing from the income? Right? You can say it a couple different ways, stock market investing. So I want to explore that question. I want to talk about what absolutely does not work, what gets people in trouble, and what's kind of the holy grail that people are actually looking for, but they've just never been taught to look at investing that way and how to get income that way. So that's what you're going to find in this video. So let's jump to it. Okay, so the first thing I notice is people's beliefs about investing are given to them, right? They think they're their own, but they're often not actually their own ideas. They were taught to them, or their big box advisor gave it to them, or some pick of the month newsletter gave it to them. And they liked the sound of it, but it actually turns out to not be what's best for them. So let's talk about a couple things that don't work, and then we'll talk about what does work. So let's talk about 3 things that do not work. Number 1 is there's this idea that your paycheck comes on the 1st and the 15th of every month, right? So you want the same type of consistency. And it makes sense because the brain wants that level of security. That brain wants that type of consistency, right? It wants to know, okay, every 1st and 15th of the month, I'm going to get $2,500 because I need $5,000 a month. And so it's that consistency. And really, when people hear that in marketing, okay, or big claims, they go, oh my gosh, I'll be okay. I'll be okay because I'll know I'll get like a paycheck, and the paycheck is consistent. I may not like my job. I may hate my career. I may not like my boss, but I'm getting a consistent paycheck. So the pick of the month newsletter world has really glommed onto this idea that get a consistent paycheck. And the brain loves the idea of the consistency. The problem is, it doesn't exist. And my finger's up, it doesn't exist unless you want to buy an annuity and get like a consistent 2.5% or 3%, which I think is a really bad idea. But annuities or guaranteed insurance products is a topic for another day. But the reason I bring it in is because people love this idea of guaranteed income. It makes them feel safe. Makes sense. So the first thing is, when someone goes to the stock market and they want to get income from the stock market, the first thing I want to say to them is, you're not going to get that consistent $2,500 every 15 days. Now, over 10 months or over 12 months, it may turn out to be that you got $60,000, okay? But it didn't come in, 15-day chunks of $2,500, the 1st and the 15th of the month. It's not going to happen that way. So the brain and the person needs to get the understanding that, okay, this is not like a paycheck from Intel where I get it. This is going to be income, but it's not going to be that consistency. And the more people want the consistency, this is super key here. The more people want that consistency, the more they're guaranteeing to lower their income, right? And think of like an annuity or a whole life insurance policy or some sort of insurance product. Like if there's legally a guarantee, it basically means I'm going to make sure I make very little on the guarantee, 3%, maybe 4%. And insurance companies, they have all these different ways of putting riders on, so they might guarantee 5%, but then you've got to pay all these fees to get the guarantee, and it turns out to be 3%. As an example. So the first big takeaway is the consistency of an actual paycheck is very, very hard to get. Okay, so that's number 1. Number 2, the problem is people go, no, RC, but you don't understand. There's dividends, and there's dividends that come out on a monthly or quarterly basis. Okay, fair enough. Problem number 2 with going for income is if you only focus on dividends, the problem is those dividends are often connected with a stock price that is going flat or down. So literally, you own a car, you own an investment vehicle that is giving you that dividend that can make that guaranteedness feeling like increase. But it's, say, in a company like, I'm just going to throw this out, GE or Exxon. Those aren't even going sideways. They're going down. But because people are not taught to think in images or how to read a price chart, they don't know that they're literally buying a crappy stock connected to a good dividend, or they're getting a good dividend connected to a crappy stock. So Problem number two is, yes, you can get a consistency with dividends, but dividends can get pulled. Okay. I remember back in '08 when someone said, I have Citibank, its dividend is 5%. I'm like, we're going through a crisis right now. It later was termed the global financial crisis. I think it's only a matter of time until Citibank Citigroup gets rid of their dividend. And a few weeks later, the dividend went away. He's like, yeah, I forgot dividends can go away. So dividends can go away. Less likely if they've been getting paid out for many decades, but still, if you just focus on a dividend, this is a problem. If you just focus on the dividend, it could be anchored to a stock that is just going sideways to down. The problem with that is it's going to actually lower your overall capital, right? Your overall account will shrink even though you're getting that dividend. So you don't want to just focus on the dividend. Okay, so those were the first two mistakes. One being, I'll say the second one. One being only focusing on the dividend. Big mistake. And the other is thinking you need that consistency, or really buying into the idea of, I will replace my paycheck and I'll do it by getting a paycheck from the stock market. It doesn't work that way. There's not the consistency. So I think if you look, those two make sense. The third problem is selling covered calls. So there's a very popular way of creating income. Here's the thing that people don't often understand. You're selling your winners and you're keeping your losers. So if you have 10 stocks and you're selling covered calls on the 10 of them, the stock that gets called away from you, that gets sold, that one's probably trending up and to the right. Well, you want to own stocks that are trending up and to the right. You don't want to sell them. So by getting into the covered call business, now guys, this feels so good to the brain. The brain loves this feeling because you get to work hard at doing something. That's it's very similar to earning money. Like with earning money, you got to go to work, you got to do stuff you don't want to do, right? The problem is hard work in the stock market world doesn't really help at all. The growth world doesn't care about how hard you work. So with the whole covered call thing, you're working hard. It feels like, God, I'm working for my income. I'm working for my income. But then those stocks that are really starting to trend and break out, which can go 50%, 100%, 500% higher, you no longer own them. So what ends up happening is you own these blue chip stocks, which is code for possibly going nowhere for decades. Walmart went nowhere for 12 or 15 years. Same thing with Microsoft. I think people should own stocks that are going higher. So the third mistake is this whole covered call. Okay, so the question is, can I replace my salary with, I have the question down here, can I replace my salary with passive income investing? The answer is absolutely, but you have to release your ideas from this covered call idea of working hard, from only focusing on a dividend. And the first one being absolutely getting this consistency. I got to get this consistent paycheck on the 1st and the 15th of the month, or just once a month from the dividend. Okay, so those are the things that don't work. Okay, so let's talk about how can I replace my salary with passive income investing. So absolutely. Now when I talk passive income investing, I'm talking about from the stock market. I'm not talking about buying a piece of real estate. I'm talking about the stock market, something with symbols, something with letters, whether it's a bond fund or a stock fund. So bond funds I'm going to set aside because with a zero interest rate world, it's very, very, very hard to get the income somebody wants. So let's talk about stocks. So can you get the passive income you want from the stock market? Can you replace? Yes, but it's going to involve three things. One, there's going to be an inconsistency. That's okay. It doesn't mean there's an inconsistency or something's broken. It just means you're not going to get it on the 1st and the 15th. So just know that you can, but you have to expect it in consistency. So here's the magic. The magic is you can find the dividend, but you also have to know how to read price charts. This is an absolute life skill. I know it sounds life skill, price charts, but it is, because think about how important it is to have stable wealth, stable growing of wealth in your life. So find the dividends on the stocks that are trending higher. This is a game changer. Then you will have two things going for you. This is so important. You'll have a dividend, Okay, now remember the baseline dividend is whatever the S&P 500 is giving, right? So let's say the dividend is 2% on the S&P. You don't get to buy anything below 2%. Now, most people know that. Most people go, well, I'm only going to look for dividends that are bigger than the market, okay? But some people don't. What they'll look for is a smaller dividend that's consistent. And I think that's a mistake. Actually, one of the most consistent dividends on the planet, this is huge, is the dividend from the overall stock market, right? Because the stock market itself doesn't cut the dividend. Think of the S&P 500. There's 504 stocks in it. 504 companies are not going to cut their dividends. So think about that. That will never be cut. You want to find a stock, right, or an ETF. Think of it as just letters. You want to find a symbol that is trending higher and has a dividend. You want the dividend to be bigger than the one from the stock market, right? I'm kind of teasing this apart. There's a lot of kind of nuggets in here, okay? And you want the growth of the stock you own to be better than the growth of the stock market. Otherwise, what are you doing? You don't want to buy a stock that is underperforming the stock market. Now you go, no, RC, you don't understand, but it has a bigger dividend. If you just said that to yourself, you're presupposing you can't have both. I'm telling you, you can have both. You can have a ticker symbol that is trending up and to the right over time, and that has a dividend that's paying more than the stock market. You can have both. You've been taught you can either have the dividend or the stock going up and to the right. Now, notice I did not say the growth stock or the income stock. That's garbage. That's like saying I'm either a Republican or a Democrat. This is growing money. You can have a ticker symbol that is creating a bigger dividend than the stock market, right? And that same ticker symbol is moving higher or is performing better than the stock market. That's the start of the conversation, right? This is only going to a 10 to 12 minute video. But when you add those two together, then you can say, can I replace my paycheck with passive income investing? And the answer is yes. And it has to start with understanding how to read price charts. So you're buying things that are trending up and to the right. I didn't use momentum. It's going to go away. I'm not saying you're doing this. I'm just increasing the volume on, you're taught that you can only have one or the other. And you want to find ticker symbols, investments that are yielding more than the stock market. Otherwise, you just buy the stock market. Thanks, guys, for being in my world. I hope you liked the video. Please leave comments because it matters. I read all comments, and hit the like button because Google loves when you hit the like button. Thanks so much, guys, and I will see you on the next video. Okay, bye. Hey guys, if you liked this video, you're absolutely gonna love our trading service. And if you've tried trading before and it hasn't worked or you've struggled, it's because you're making one of 7 mistakes, I guarantee it. And after the click, I'm gonna show you exactly what those 7 mistakes are. All right, I'll see you there.